Do you ever feel like you're running a race where the finish line keeps moving? You work hard, you save every penny, and you put it in the bank because that's what we were taught was safe. But despite your hard work, the numbers on your screen don't seem to buy as much as they used to. I get it. It's frustrating. But what if I told you the system isn't broken? It's just working on a set of rules they never taught us in school. Today, we're going to pull back the curtain on the biggest magic trick in history, how banks create money out of thin air, and more importantly, how you can stop being the resource and start being the player. Most of us imagine our bank is like a giant, high-tech locker. You drop off $1,000, they lock it up, and give you a little thank you interest. Here's the reality. That money doesn't sit there. The bank sees your deposit as a loan you've given them. They pay you maybe 0.4% interest, while inflation is currently eating away at your value by 2% to 3% every year. You're actually losing purchasing power by just letting it sit. Meanwhile, the bank takes your $1,000 and uses it to fuel their own empire. This is where it gets mind-blowing. It's called fractional reserve banking. Historically, banks had to keep a fraction of your money in the vault, usually around 10%. If you deposited $10,000, they kept $1,000 and lent out $9,000. Suddenly, there was $19,000 in the system from your original $10,000. But here is the 2026 reality. In 2020, the Federal Reserve quietly dropped the reserve requirement to 0%. Legally, they don't have to keep any of your specific deposit waiting for you. Most money today is just digital bits on a ledger. When the bank grants a loan, they don't move physical cash. They simply type numbers into a borrower's account. They create the money the moment they create the debt. You might feel angry hearing this, but don't. This system is how homes are built and businesses are started. The goal isn't to hate the bank, it's to understand the game. The bank makes a net interest margin, the gap between the tiny bit they pay you and the huge 18 to 29% they charge on credit cards. If you're carrying a balance, you're the bank's favorite customer. But if you pay your bill in full every month, they actually call you a deadbeat because they can't profit off you. The wealthy don't just save in a bank. They use the bank's own logic against it. They borrow against assets, like stocks or property, at low rates to buy more assets that grow faster than the interest. They turn the bank's thin air money into their own real-world wealth. Banking is a psychological game of confidence. As long as we believe the money is there, the system moves. But your personal confidence shouldn't come from a bank statement. It should come from your financial literacy. Stop being a resource for their shareholders and start being the CEO of your own life. Educate yourself, shop for better rates, and understand that every dollar you have is a tool. You've got the knowledge now. That thin air is yours to breathe too. If this opened your eyes, hit that subscribe button. Let's stop